Welcome to Option Trades Today. I'm Tony the Baptiste, and I have a trade idea for you today. November 16th, 2023. But first, let's take a look at what's going on in the market. Even the S&P is down 13 handles. You can see they're about $4 off of their lows, but you can also see here by this graph that even the S&Ps, the NASDAQ, the Russell, they've all been on a major tear to the upside. The Dow all down today, Dow down 123. Russell is the weakest of the group. It was the strongest yesterday. Volatility only up by 2 cents. On the first down day, with the market being as strong as it has been, especially in the NASDAQ and even the S&Ps, I'm surprised by the volatility not upticking more, and maybe that's a signal to the bulls that we don't really have any downside momentum or turn in the market as of yet. Keep your eye on volatility. If that creeps up today, then maybe you get a little more downside. If it stays here, well, I think you're going to have a little bit more complacency in the market and maybe even a little bit of an up move. But with this implied volatility being so low, it's certainly wreaking havoc on the trades that we look to trade with, meaning those with high implied volatility. I'm going to change this high IV index 5-day change to the upside, and you can see here that there's really no stocks when you look on the left side here of the names that we like to trade. The names that we like to trade, like a Netflix, have very low implied volatility. Let's go down on this graph all the way down to the bottom of the page. Netflix up $2.27, has an IV rank of 2, very, very low. It has caught a little bit of a very small bid. I can't even make an argument here. IV rank of 2 is very, very low. And you can see here from the IV rank graph, very, very low in Netflix. Now, I've been looking at Netflix for quite some time. I've been looking at it to get short a little bit in Netflix. It's a stock that I like to trade, but it's a $460 some odd stock, so it makes it very difficult to trade no matter what account size you have. I'm going to go to January, and just to give you some things on why I'm putting on this trade, let's take a look at a standalone trade. If you were looking to sell a naked call, I'll go to both sides for a quick second. You'll be looking to use around $4,600 in buying power for a trade. Not a large amount in a margin account. In an IRA account, you might be looking at $40,000 or $46,000 to sell a naked call or put in either one of these stocks. What I do want to show you here is call skew. Now, even though the IV rank is very low in Netflix, this has a very high call skew. The stock is $465. Let's go further than $30 to the downside, and you'll see that these puts are trading at around $11. Let's round up to $12. You go $30 to the upside to $495, and you're looking at options that are trading over $15, $15.50. That's call skew. So naked calls, as I've explained to you on this podcast, naked calls trade expensive. Spreads trade cheap. Spreads trade cheap because of that call that you'll be selling. The call spreads trade cheap. Put spreads actually trade expensive. Call spreads trade cheap because that call that you're selling on a spread has a higher implied volatility, and that's usually the case, but even higher volatility than the closer to the money call that you're buying. All right, so what am I going to do here? It sets up to me for a broken wing butterfly. Now, it only have to get direction right. I'm going to use call skew in my instance by doing a call broken wing butterfly. Where am I going to go with this? I'm going to go to around the 505. I go to that 30-ish delta when I'm looking for my buy side. I like to go as wide as I can on a $500 stock. I'd like to be more than $10 wide. I'd like to be $20 wide, $15 wide. I decided to go $15 wide on here. I'll explain to you why in a quick moment. If you have the buying power and you wanted to put on a spread like this where you're using, $5,000 in buying power, collecting $5 in credit, you certainly could. But Netflix has that velocity of movement on both sides. I think it's a little bit too much risk on a low IV rank stock to be putting on just a ratio spread. So I'm going to define my risk. And since I'm $15 wide here, I typically like to go twice as wide, which would be $30 wide. You can see here that your break even is right around 540. That's that green line that you have here. That gets you, when I say by $15 wide, I'm $15 wide between 105 and 120. I like to go $30 wide, twice as much. So that brings us to the 550s. Now I'm collecting around 90 some odd cents. I like to collect a little bit more than $1 when I'm putting on these trades, or the stock is rallying a little bit. So maybe you could do this right now. I've been getting filled 2, 3, 4 cents below mid price on a trade like this in Netflix, but I'm going to move and take a little bit more risk. You can see here that I'm using around $1,400 in buying power. I'm going to move it up and take a little bit more risk. I'm going to take almost $1,900 in buying power. My mid price right now, I believe I got filled at 141. Let's take a quick look on where I did get filled. You can go down to the follow page here on this trade. You can go to Bob the Trader because I'm not allowed to have my own name. And I did get filled at $1.41 credit. I just did that a moment ago when the stock was right around here. Let's go back to this trade and break it down for you. I just explained to you why I went a little bit wider, taking on more risk, and that is the result of this low IV rank that I have in here. So I'm going to have to take around $400 more in buying power by bringing my wing that I'm buying out by about one strike, $500, $400 in buying power more. I got filled at $1.41 credit. This has a pop of 83%. I love it being over 65 to 70%. My break even, as you can see here, even from the last trade that was using more money than what we're using, that 1x2 that I showed you, my break even is just over 135, in between 135 and 140. Why? Because I'm long a $15 wide call spread one time, and I'm short a $35 call spread one time. That's how this 1x2x1 breaks down. So my break even is $15 higher than 520, which brings us to 535 plus the credit you receive. So it's 536.41. I got filled at 41 here, 141. That's where I got filled on the trade. It brings you about $3 a day in theta decay. Your delta is short, just about 5 deltas, so you have to be omnidirectional or slightly bullish in Netflix. Why do I say omnidirectional? Because if you were to hold this to expiration, that's 64 days from now, I think it's unreasonable. But if you did and the stock closed at 520, that's $520. I think that's highly unlikely to pin. You make $1,500 on this trade. More likely, well, there's a good chance that we're going to be inside this range. Matter of fact, there's an 83% chance that we're going to make at least a penny on this trade. What would be a reasonable amount of money to make on this? I like to make $1 on my $1,800 or $1,900 in risk that I have. Of course, the max loss is going to be exactly the same because it's a defined risk trade. All right, ladies and gentlemen, please follow, look, watch. Do the opposite if you don't like what I'm saying. You think the trade stinks? Do the opposite. Doesn't matter to me. As long as you're using the Tasty Trade platform, that's where I put a big asterisk on you. Please open, move, transfer, bring your account to Tasty Trade. Help me keep the lights on here. Please leave me a comment down below. I'd love to hear from you on things that you might like to see on this podcast, and crush that like button, as the kids say. Or I don't know if I could do this anymore. Peace!